Hello everybody, welcome to today's fundamentals. Hello Peter.
Hello.
What's new in the FX market?
Well, on a fundamental level, I would be noting practically market worse for the possibility of the US defaulting on its debt. It's a big issue. The latest development yesterday was that there was a meeting between Republicans practically and the White House. Now, there seems to be no or little progress regarding the possibility of the US debt ceiling being raised, which would practically end the speculation of the US defaulting. And that may be weighing somewhat. On the other hand, though, we have to note here that both parties agreed that defaulting is not an option. That was a positive. But we still have to see some actual concrete progress on the issue. It would be noted that more or less, okay, market worse may have eased a bit, but overall I would highlight US Treasury Secretary Yellen's comments yesterday, where she stated practically that the clock is ticking and the US could default pretty soon. Other than that, I would be noting also that we had some financial releases of interest. We had the US retail sales growth rate, which accelerated, yet failed to actually reach its target. That would be a little bit disappointing on the demand side of the US economy. On the flip side, the production side seems to be doing well, or at least we got some positive readings. We had the industrial production growth rate for April as well, which actually accelerated beyond market expectations, and that was a positive. That was it.
And how about the US monetary front?
Well, on the monetary front, we had a number of statements from a high number of Fed officials, Fed policymakers to be more exact. More or less, to one degree or another, everybody seemed to be leaning on the hawkish side. Those characteristics that we had comments from ranging from practically stating that the Fed should keep rates at high levels for a prolonged period of time, which more or less tended to contradict market expectations for possible rate cuts by the bank mid to late September. On the other hand, or if you prefer, even more hawkish, were comments made by some policymakers that they would feel still quite comfortable should the bank continue rising rates. So overall, we see that there is a continuance of the hawkish rhetoric on behalf of Fed policymakers. Now, that does not contradict the idea of the Fed pausing its rate hike path, but it seems that Fed policymakers remain on guard for inflationary pressures, and should they not subside, they would be ready to raise interest rates even further, which may weigh on the market sentiment, especially on riskier assets.
And in the rest of the FX market?
Oh, we had a number of releases yesterday. I would make a start with German CEF indicators. They were from May. Both indicators dropped. That was the first notation. The second would be that practically it seems that investors become more pessimistic about the outlook of the largest economy in the Eurozone, while at the same time conditions on the ground seem to be deteriorating. So that's an issue which could be weighing on the Euro somewhat. I would also be noting that we had from Canada the CPI rates. Now, we got some conflicting messages there. On the one hand, we had the headline rate which tended to accelerate even a bit, while the core rate slowed down. And that tended to highlight the effect of oil prices on consumer prices. I would be also noting the UK employment data. They were a bit conflicting. They were from March mostly, which more or less maintained the view that the UK employment market remains rather tight, yet I wouldn't say some cracks, but still it's not as tight as it used to be. I would also note during today's Asian session, we got from Japan the GDP rates. Now, there was a wide acceleration for quarter one than expected. It was the preliminary rate. And that was on a macroeconomic level, a positive for the Japanese economy. It was expected to be quite low, anemic almost. It didn't. It accelerated, I think, to 1.6% year on year. I would also note that we had from Australia the release of the wage price index. It was for Q1. The wage price index accelerated beyond expectations, which implied more or less that the Australian employment market continued to feed inflationary pressures within the Australian economy, as wages were on the rise. So that gains particular attendance given that we have also the release of Australia's employment data tomorrow during the Asian session.
And how about US stock markets?
US stock markets were mixed, actually a little bit lower. Market worries seem to be tantalizing traders. I would expect fundamentals to continue to play a key role here. Also, monetary policy is to play a key role, but let's not forget here that we also have the earnings reports, which may more or less improve market sentiment should they come out better than expected.
And what's in today's calendar?
We don't have many releases today. I would be noting, though, in the American session, the construction data. The building permits are expected, the number of building permits is expected to drop. On the other hand, the number of house starts is expected to rise, and so we're getting some mixed signals here as well. Overall, though, I have to note that market worries about construction and real estate in the US are quite high. So I would expect the data to gain particular attention from traders. I would also note from the US, the EIA weekly crude oil inventories figure. There was a surplus, a buildup of oil inventories in the US in the last week. We expect the new reading to draw down. And should that be the case, that could provide some slight support for oil prices, as that would provide practically the indication that the US oil market remains tight as production levels were not able to catch up with demand once again. Other than that, we have a number of policymakers speaking, this time from the Eurozone, but I would be highlighting also BOE Governor Bailey. So pound traders may find some interest there near the end of the European session today. During tomorrow's Asian session, I would be highlighting Japan's trade balance, which is expected to improve its trade deficit, yet it's expected to shrink and could provide some slight support for the yen. And I would be highlighting also definitely Australia's employment data. We expect the employment change figure to drop, yet to remain in the positives, while the unemployment rate is expected to remain unchanged at quite low levels. Overall, okay, the employment figure dropping would be expected as it's a correction lower. But the fact that the unemployment rate remains at very low levels highlights exactly the tightness of the Australian employment market, which may allow RBA to remain a little bit more hawkish.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation for today. I'm a little bit ahead of schedule. And I'm looking actually at the 4-hour chart of the US dollar index. All charts will be presented are to be of the same time frame, unless otherwise stated. Definitely the first note we have to make here is that the US dollar was on the rise found some resistance at the 102.45 resistance line as we expected. Yet during today's European session was able to clearly break above it. So that has to be switched into a support line. At this point, definitely we have to go hunting for a new ultimate resistance line. Sorry. Let me adjust the chart. I would be highlighting this true as the R2, and the R3 will be all the way up here at this peak here. That would be the 104.05. And this would be the 104.45. In red, please. Okay, let's correct the labels as well. Pretty wide. The support line could go a little bit lower. Note the true here. Starting with the 100.40, 45. The S2 now moves to the 101.55. The S1 at 102.45. The R1 at 103.05. The R2 at 104.05. And the R3 at 105.45. So what do we have here? For the time being, there seems to be a clear-cut upward movement. Definitely this has to be switched. Shifted to the right. So there's a nice upward trend line supporting on the movement of the index. The RSI indicator is clearly above the reading of 70, which tends to highlight exactly the bullishness of the market. I would be noting here that, okay, on the one hand, definitely that highlights the bullishness of the market, but on the other hand, though, may also imply that the index is at overbought levels. And that notion is also being supported by the fact that in the forward chart, the price action was able to break the upper Bollinger Band. Once again, highlighting the possibility of the index being overbought. Nevertheless, for the time being, we tend to maintain our bullish outlook. I would expect, though, some correction lower. And I would maintain my bullish outlook as long as the upward trend line remains intact. In that case, and should the bulls maintain control, I wouldn't be surprised to see the price action breaking above the 103.05 and start aiming for the 104.05. On the other hand, should there be a stabilization allowing for the bears to take over, Okay, it's a far-fetched scenario for now, but it's interesting to see what would happen in that possibility. Note that the bulls have already started to more or less hesitate. Should the bears take over, we may see the price action dropping. Definitely, we would require a clear break of the upward trend line we have just mentioned in order to signal exactly that the upward movement has been interrupted. I would also require the index to drop below the 102.45 support line and start aiming for the 101.55 support level. Once again, for the time being, bullish outlook remains upheld. I see in the comments, for a possibility of a sideways motion, you're asking a sideways motion. I would expect the sideways motion to be confined between the 103.55 level here, tends to highlight this, and the 102.45 support line. The commotion here tends to highlight it. So that would be a sideways motion like this. Once again, we would see the price action breaking the upward trend line, but in this case, the stabilization of the price in sideways movement bias, that would imply also that the price action would have to respect the R1 and the S1. Let's have a look at Euro USD. Euro USD, which understandably has been dropping given the strengthening of the US dollar and has broken below the 1.0845. Let's turn this into a resistance line. And let's go hunting for a new ultimate support line. Sorry. I would be setting these throws here, also these peaks, as our next possible support line after the S2, and that would be the 1.0440. We're adjusting. It's definitely a bit narrow, but that's understandable given the width of the distance between the S1 and the S2. The R2 being set at 1.0965, the R1 at 1.0845, the S1 at 1.0715, the S2 at 1.0530, and the S3 at 1.0440. The direction here clearly has changed, as we have mentioned yesterday as well, in the sense that we have mentioned that for a bearish outlook we would require the pair to drop and clearly break the 1.0845. That happened, and thus I would be switching, practically shifting a little bit to the right, the downward trend line guiding it. So despite the stabilization, the bearish movement seems to be continuing. The RSI indicator is at the reading of 30, also implying a bearish sentiment on behalf of the market for the pair. Note though that the price action has hit on the lower Bollinger Band, which may slow down the bear somewhat. Should the bearish movement be maintained, I wouldn't be surprised to see the price action aiming, if not even reaching, the 1.0715. And I'm highlighting this level given that it has provided support here and here, actually some commotion here and support here more clearly. So overall, we tend to maintain a bearish outlook here for the pair. On the other hand, should the pair stabilize given that it has hit on the low Bollinger Band and the bears may find some difficulties to proceed, we may see the price action revolving around the R1 1.0845, a first signal which would be more or less highlighting the interruption of the downward movement, would be exactly a breaking of the downward trend line we have just shown. But we prefer another one. And in that case, we would be switching our bearish outlook in favor of a bias for a sideways motion. Now for bullish outlook, despite that being improbable, but it's still a possibility, and it should be covered. In that case, we may see the price action rising, breaking the R1 1.0845, breaking also the downward trend line we have just mentioned, and start aiming all the way up to the 1.0965. Okay, let's have a look at GBP/USD. A similar picture. Shifting the downward trend line to the right. And that becomes more clear if we drill into the daily chart. Back to the forward chart, we tend to maintain our bias for a bearish outlook for the pair. And in that case, I wouldn't be surprised to see it aiming, if not even breaching, the 1.2350. The idea of a bearish outlook seems to be also supported by the RSI indicator, which has reached the reading of 30. Once again, though, the price action has hit on the lower Bollinger Band, which may slow down the bear somewhat. Should the pair stabilize, we may see it correcting a little bit higher and breaking the downward trend line guiding it, yet remaining clearly between the 1.2540 and the 1.2350. Okay, let's move now to USD/JPY. Nice upward movement being maintained, a shift to the right of the upward trend line. Definitely the bullish outlook is being maintained here, given also that the RSI indicator has broken above the reading of 70. Corrected a little bit low, but still above it. Once again, highlighting, on the one hand, the bullish sentiment of the market. On the other hand, though, may also be implying that the pair is at overbought levels. So that's another issue. Should the bullish movement be maintained, I wouldn't be surprised to see the price action rising, breaking the R1 137.75 and start aiming for the 139.40. On the other hand, should the pair stabilize, once again highlight the possibility of a break of the upward trend line, which would be signaling the interruption of the upward movement. Moving now to USD/CHF, moving upwards, breaking the 0.8935. Let's color this in green now. I'm setting the next resistance line at the 0.9220. Given the peaks here, 1, 2, 3. Let's correct the labels as well. The R1, which is being placed at 0.9020. The R2 at 0.9115 and the R3 at 0.9220. Once again, we tend to maintain our bullish outlook for the pair. In this case, we may be drawing, sorry, my bad, 8860 dot this. In this case, I would be drawing a wider upper trend line starting from here, like this. I think it's very clear cut. There is two exemptions though, and the one would be the higher peak, which was here. Some stabilization, which I would be noting it here. But other than that, it's an upward movement. 1, 2, 3, 1, 2, 3. If we drill to the daily chart, it becomes more obvious. Note how we had 1, 2, 3, 4, 5, 6, 7, 8, 9 candlesticks in the greens. That means 9 days, with the exception of one day, all others were in the greens. That's bullish enough. Now, back to the forward chart, and should the price action maintain its upward movement, I wouldn't be surprised to see it breaking the 0.9020 and start aiming for 0.9115. The RSI indicator is, okay, it's not at very high levels, it's at 61, but still quite bullish. And I would be highlighting the fact that the price action has hit the upper Bollinger Band and is now correcting a little bit lower. I think if we drill into the 1 minute chart, that would become more obvious. Note the correction which happened here. Back to the forward chart. Once again, bullish outlook seems to be maintained, and we expect the price action to break above the 0.9020 resistance line and start aiming for the 0.9115. Moving now to the Aussie. We have renewed bearish tendencies here. Yeah, that would sorry. Definitely this has to be changed into a resistance line. It's interesting that we have a mid-level here. Okay, first of all, let's find a new ultimate support line. I would be noting this true here. Let's readjust the labels. Starting with the 0.6920. moving with the R2 0.68, the R1 at 66.90, the S1 at 0.6580, the S2 at 0.65, so at 64.50, and the S3 at 0.6365. So we expect the bearish movement to be maintained despite the RSI indicator not breaking below the reading of 30, but it's still at quite low levels. It's currently at 34, 37. In that case, we may see the price action of AUD/USD proceeding downwards towards the S1 0.6580 level, which provided support here, and we expect it to be broken. If that's the case, then we may see the pair start paving the way all the way down to the S2 0.6450. But should the bears maintain control, even in that scenario, it would take a while to actually reach the S2. First target to watch out for the time being, I think, would be the 0.6580. Let's have a look now at USD CAD. Okay, there was an upward movement, definitely. But in my opinion, that's still unconvincing. The RSI indicator is pretty low in contrast to other currencies. Actually, not pretty low. It's pretty near the middle. It's at 56. I'm not convinced yet for any bullish tendencies on behalf of USD CAD, despite the upward movement we had over the past 24 hours. At some point, it even threatened the 1.3545. Now, for a bullish outlook, we would require the pair to rise, break the R1 1.3545, and start aiming for the 1.3665. On the flip side, should the bears take over, we may see the price action dropping, breaking the 1.34, and start aiming for the 1.3270. I would like to have a look at NASDAQ. And there's a reason why. The reason is that in contrast to other stock market indexes, NASDAQ was on the rise. It has broken the 13,400. And it's a nice upward trend line. Beautiful. You can see how higher truths and higher peaks are forming. Yet note the slowdown of the peaks. And there seems to be an increased degree of difficulty for the bulls to advance further. But for the time being, given the upward trend line, the bullish sentiment seems to remain intact. We'll discuss new levels for this tomorrow. So thank you very much for your attention. From all of us here at IronFX, best wishes for solid trading.
Welcome to another video. Today we'll be looking at momentum trading strategies. Momentum trading is one of the simplest forms of trading styles where traders buy and sell assets based on price trends. Momentum trading strategies focus on price action and price movements instead of fundamental factors and long-term growth. Basically, momentum trading is a trading strategy in which traders buy financial assets when they're rising and sell them when they seem to have peaked. Momentum trading is based on these key factors: volume, volatility, and time frames. Volume is the amount of a particular asset that is trading within a given time frame. It is important to momentum traders as they need to be able to enter and exit positions quickly, which depends on there being a steady stream of buyers and sellers in the markets. Volatility is the degree of change in an asset's price. If a market is highly volatile, it means that there are big price swings, while a market with low volatility is comparable stable. Momentum traders will look for volatile markets to take advantage of short-term rises and falls in an asset's value. As momentum trading tries to capitalize on volatility, it is important to have a suitable risk management strategy in place to protect your trades from adverse market movements. This should include stops and limits. Momentum trading strategies usually focus on short-term market movements, but the duration of a trade can depend on how long the trend maintains its strength. This could make it suitable for traders who use long-term styles, such as position trading, as well as those who prefer short-term styles, such as day trading and scalping. Popular indicators for momentum trading include the momentum indicator, the relative strength index, moving average, and the stochastic oscillator. Thank you for watching.
Okay. All right. Okay, I see a few of you guys have already started joining, so let's give it a moment for the others to join first before we begin. So yeah, let's wait a minute or so. So I actually have turned on the webinar chat. So it would be better for you guys to talk in the webinar chat other than the question and answer. Because if you talk in the question and answer, nobody else can see your questions. Then I have to, speak it out or copy your question into the chat. So hello there. Can you guys hear me? Can you guys hear me doing a mic test? I've turned on the chat. All right. Hey, hi there. Hi. Okay, that's great, Marius. Hey, thanks, Vinicius, Sylvia. Okay, I'll give it another 30 seconds or so. We'll let everyone join first so they won't miss out. So yeah, by the way, where are you guys from? So yeah, for me, I'm actually from Singapore. I'm actually in Asia. So at the moment, it's very, very close to dinner time. It's already 6 p.m. at my time. Oh, nice. Portugal. Where is that? Let me see how far is it. Okay, it's at the other side of the world. Wow, we are in Spain. Okay, I think it's the other half of the world. So yeah, I'm actually from Asia. Okay, how's everyone's week been doing? Has anyone traded this week so far or today? So today I actually avoided the London session. Price was very, very choppy within a consolidation. Okay. Let me get these out. Okay, so making some profit. What trade do you take? Do you mind if you share your trade? So I'm quite interested in how you guys trade. What kind of trades do you take, especially for today? Since you said you're making some profit, I'm interested to see which trade you actually entered. Because for me personally, just now I didn't see any proper setups. So by the way, there is the IronFX YouTube channel that you guys can actually subscribe to. So future webinars like this, which are recorded, should be uploaded or will be uploaded on the IronFX channel. You guys can actually go there and look for a recap. So if you want to find out more webinars like this, you can actually go to ironfx.com. So under IronFX School, you can actually go to webinars. So right here, you can actually register for our future webinars like this right now. So I send the link to the chat also. Okay, you actually got a Euro USD buy to 1.07670. Okay, let me see. I'm very, very interested, honestly. Let me see. You got to load my layouts. Euro dollar. So I actually also had a bias that Euro dollar might continue going up. So I was actually looking for some and a ballpark area of 1.07, this specific area. 1.07800. So you are going towards 670. Okay, so I guess you are looking to clear out the previous swing high right there. So that's your nearest resistance. So currently resistance 1, that is the next resistance. So you can see very, very clearly 1 tap, 2 taps, 3 taps, 4 taps. Okay, roughly 4 taps there. Overlap resistance. So just looking at the daily, I actually wanted to take that buy to clear the upside, because if you noticed, very, very nice right here, we actually have some sort of market imbalance. There's an imbalance in the market right there. So likely we can possibly see your trade go right, hit there, and likely reverse back down. That could be a possible scenario, or price can continue moving bullish. So at this point of time, I will not be trading, not entering any trades. So do you mind if you share what number did you enter? I mean, what time did you enter? And what price did you enter? So in the meanwhile, so when I'm doing webinars, there are actually people who told me, wow, they want to contact me, want to ask me questions regarding the charts, regarding their trading. You can actually contact me here. You can actually click on that link. You can search everything about me. It's just a quick little short portfolio about myself. So feel free to check that link out. Give me a support if you want to. You can follow me. It's free. Okay, you entered at 1.07422. Let me take a look. 1.07422. Okay, that was a very, very nice entry. Why do I say so? Because if you look right here carefully, you actually only took the trade during the London session and when price broke out of this consolidation range. So not bad. You actually took a breakout trade. So you were up about roughly an estimated of 18 pips at the best earlier on. So right now you're floating at about 8 pips. Okay, because today, okay, you said that because today the Euro USD market is mostly bullish. Okay, well, do you actually incorporate any fundamentals to your trading? Hey, hi there, Wisdom, Ik Yang Wa. Just saw you joining. So yeah, actually I'm just looking at Vinicius Silvia's trade recap. A trade he actually entered right here. He actually was in a buy, and he's actually looking to take profit and clear the previous swing high there. So where's your stop loss? Is your stop loss, am I right to say that it's somewhere here, your stop loss? Oh, you use 3 moving average. Nice, nice. Okay, well, it's actually very, very cool to see that you guys are actually using multiple trading strategies, incorporating it to your trading style. For me personally, I actually use smart money concepts. I do not use any indicators for my trading. So yeah, that was a very, very good entry. Good job, good job. Hey, hi there, Jay-Woo. Okay, stop loss at 1.07319. Wow, not bad, not bad. 319. So stop loss is slightly right there. Okay, that's quite a reasonable stop loss. Okay, you are risking 10 pips. Hey, hi there, Diago Imbara Garigo. Okay, without further ado, let us begin the webinar first. So as you can see, you guys registered. What you guys register for is the Fibonacci series 4 out of 4 projections. Okay, so 4 out of 4 projections. I got to read the disclaimer first before I begin. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So this material is just the opinion of the author, which is myself, and the client's investments, objectives, and risk tolerance have not been considered. So IronFX is not responsible for any loss arising from any information contained. So redistribution of the material is strictly prohibited. Also, just to let you guys know, this webinar is recorded and will be uploaded in the future on YouTube or on IronFX LinkedIn channel. Okay, so Vinicius actually asked, okay, should you close or should you let it go? Well, this question is very, very subjective. You got to follow your own trading strategy. So since you are using the 3 moving average, you should use your confirmations, the idea invalidation. Is your idea still right? Or do you think it will go down? So this part is up to you, man. You got to handle the trade. That's the only way that you can learn from it. If you close early and then it eventually hits your take profit, there's something to learn too. Okay, let us begin. So, okay, my name is Chen Yongqing and I'm actually the investments analyst for Everest Fortune Group. So we are actually the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So just to let you guys know, today the webinar will be a shared webinar. So I'll be doing it together with Sarah, my colleague. So this is Sarah right here. So she'll be taking over for the first half of this webinar. Okay, let us begin. Okay, she will take over now. So later I'll come back, I'll take the other half of this webinar. Okay. I think, okay, so if you want to, this is a PPT, then you want to, over here is the minimize, then you can open Google Chrome. Okay.
Hi everyone, my name is Sarah. Okay, so today I'm going to be the first part of the Fibonacci retracement 4.4. Okay, before I starting, let's take a look at today's agenda and what we are going to learn and what I'm going to share with you guys. So firstly, we are going to have a recap on Fibonacci retracement essentials and what are the importance of the Fibonacci retracement. And secondly, the ideal market structure, which means under which situation is good for the Fibonacci retracement and which graph or which is not good, is not suitable for this Fibonacci retracement. Thirdly, we are looking at different Fibonacci retracement level, which means Fibonacci retracement, Fibonacci expansion, and also Fibonacci projection. Fourthly, we are looking at what are the Fibonacci projection, and lastly, what are the confluence level, which means what are the significant level we need to take note by. Okay, let's start with the first one. Before we are using Fibonacci retracement, always to check is it is it suitable to use this one as an indicator for us to find the support and resistance, or is that a good thing? Is that the correct timing? So what are the essential steps that we are finding using Fibonacci retracement? Firstly, we must to make sure the market is clear enough. What's the meaning of market is clear enough? We are looking for the big zigzags. Okay, it's a big moments. It's not like something like very small moments. We cannot see it. And secondly, we need to identify the recent trend. Okay, what is this means? Means we need to identify whether the whether the price is going up or going down. So thirdly, we need to identify the recent major swing low and swing high, which means the highest point and the lowest point. we always draw the line from the left to right, okay? So from the highest to lowest or the lowest to highest. Okay, so for this graph as an example, so you see this one is the, okay. So we draw the Fibonacci from the highest point, which is there, and to the lowest point because it's a downtrend. Okay, what I mean by significant swings. Okay, so now let's take a look at what is called insignificant swing, which means the time we cannot use Fibonacci. What is insignificant mean is like the movements are too small and there are no significant swing high and swing lows. Okay, so you see this graph, the price movement are too small and there are no significant, no very big movements of the price. Let's take a look at this as an example. So this one we are considering as insignificant lows. As you can see, the price is moving up, down, down in a very small range. So this is not very significant and is not useful for us to using Fibonacci. Okay, so now let's take a look at what is called significant swings. Okay, so it is just the opposite way of insignificant swing, which means there are significant move up and move down. You can see this graph as an example. There are significant move up, then move down in a lot of, then move up again, then down again. Okay, so which means the peak, okay, means the highest point and the lowest point is very obvious. Okay, means very easy to identify and very easy to see it. And make sure it's in a very clear market movement. You see, down is down is all the way down, then up is all the way up. It's not like the price is up, down, and down, and down. This one considered in unclear market movement. Okay, take a look at this as an example. So you see here, so you see this peak and this peak is all significant highs, okay, swing highs. And you see here is considered significant swing lows, okay. So we should know like this significant swing and significant swing high and swing low is good enough for us to identify it in a very clear market structure. Also, it's very easy for us to draw up all the Fibonacci retracement. Okay, so now let's take a look at what do I mean by follow the market structure. Okay, so here is an example of how to draw a Fibonacci trend lines. Okay, so your Fibonacci trend line must be follow the market or the price structure clearly. You see, in this case, there is a zip chart market structure. Okay, so it's not in a straight line. So the retracement down here cuts through the market structure. You see here. Let me figure out how can I. Okay, you see this part here. Sorry, let me. How to clear the thing? No, I use this one. Sorry. So you can see the retracement draw here. Okay, it has cut through. Why still like this? Okay, you can see the retracement here is cut through the market structure. Okay, which means making the Fibonacci retracement less effective. Okay, so take note. So here is the Fibonacci retracement should not cut through too large area of the market structure. Also, the Fibonacci trend line must follow the market structure as just now I mentioned it. And lastly, the Fibonacci retracement should not derive too much from the price movement, which means if the price movement is going up, you cannot be a huge going down. So let's take a look at what meaning by follow the market structure. Okay, so follow a market structure means there is a clear downtrend movement. Okay, and the Fibonacci retracement trend line follow the price movement. And lastly, we tend to work better on higher time frame. For example, it's working better on the H4 or H1 or day 1 time frame rather than like 15-minute chart. So let's take a look at this one. Okay. Wait. Sorry. Okay, let's take a look at this one. You see, we draw the Fibonacci from the highest point to the lowest point. As you can see in this example, the price is follow good enough to the market, to the price movement. So there is a clear downtrend movement. Let's take a look at this. Okay, so what meaning by clear market structure? As you can see, there is a very clear swing low and very clear swing high. You see here, swing high, swing high, swing low. Okay, so all this point is very significant and for me, it's very easy to identify it. It consider a very clear market structure. So what's meaning by unclear market structure? As you can see, just now I mentioned the price going down, up, down, up, down, up, down. Okay, so this one is very hard for me to identify actually which point is considered a significant swing high or significant swing low. Okay, besides Fibonacci retracement, we have different kind of Fibonacci retracement level. So every time we are using the Fibonacci tool to draw it on our graph, so you can see the number vary from 0 to 100. We are saying is Fibonacci retracement level. Okay, so the negative number we are saying Fibonacci expansion. And for the number more than 100, we are considering Fibonacci extension. Okay, so now I will just demo a very simple way to draw Fibonacci retracement. Let me open my trading view. This screen is shared. Oh, I need to pull out to here. Okay. Okay, so is there anyone looking for any currency pair that I can draw for you? Or like if there is no one, so I will just using my own graph. I will just randomly choose a one. Is there anyone here? Okay, so if no one answer, I will just Aussie USD. Okay, let's take a look at Aussie USD. Actually, this is the currency that I want to draw it. Okay, this is the Aussie USD that I have just analyzed today. Okay, as you can see, the current price is a price about 0.69. So I already found the first support and first resistance, which is the first resistance is considered the recent swing high, and first support is the recent swing low. But I don't think my price will go up or like go down to the price today, okay, or like in a shorter time frame. So what I like to do is like I will identify the significant high here, which is at this place. Significant swing low and significant swing high here. Okay, so what I do is I will just draw, let me remove this thing first. Okay, so what I do here, I will just use this one, Fibonacci retracement from low to high, okay? I like to show all Fibonacci first. Then I see, okay, you can see the price actually is here. Is at exactly the level 61.8, which is a very significant in Fibonacci retracement. So by this line, I identify here is as my intermediate support, okay? So it's somewhere here. So I was hoping once the price will pass through the 61.8% Fibonacci retracement, it will go up. If not, the price will go down. So same as this one, okay, how I'm going to find the first support? First support is the recent swing low, but I need to add more confluence to my first support. How I'm going to looking for is a valid or like is a very key support area? So I draw it, I identify the swing low. I identify the swing low and identify the swing high. Okay, so I use Fibonacci to draw it from low to high. Okay, let me hide this one first. Oops. Okay, and now it's more clear. As you can see, there is 15% Fibonacci retracement, which is almost in line with my first support. Okay, so here you can see this level is very significant and very key when we're doing analysis. And once the price is trying to break through this level, it will go down. Otherwise, this support is very strong enough that price unlikely to able to break through. So this is how I'm using Fibonacci to identify all the key support level and how I identify the price will move. Okay, so now I may pass to my colleague Yongjing to share with you more on the Fibonacci projection and expansion. Thank you.
Hey guys, thank you Sarah for that. So I'll just continue the other part of this webinar, so it might get a little bit more technical. Okay, so Vinicius Sylvia and Techno Camon X Pro actually asked for Aussie dollar and USD JPY. Well, later on when we finish this webinar, if we have extra time, definitely we will go through we can look at some live charts, give some of my thoughts. Okay, let us continue. So the next part of the webinar, okay, we're going to show you how to do extensions and expansions. So for this slide, I know it might possibly confuse you guys, so I'll just jump into the charts. So how to use a Fibonacci extension and expansion. So just now Sarah has already mentioned the expansion line is actually a negative 27.2% and negative 61.8%. While the extension is the positive 127.2% and 161.8%. So let us see how it works. So maybe looking at the 1 minute chart. Okay, there's a line here. I was thinking, what was it on the, I think it was a Zoom thing. So let me clear it out. Clear all drawings. Okay, just having a quick look at it. Let's take a look. Okay, so if you actually draw a Fibonacci line, let me find a better setup. Okay, right here. Draw Fibonacci line from the top to the bottom. Let's see where price could possibly head towards. So you actually notice that price went up towards the, so we'll be looking at extensions first, 127 and 161.8%. So notice that price went up and headed towards 127.2%, and then the 161.8% before it rejected back downwards. So just by using extensions, you can actually use it as a form of take profit area. And use it to take profit once price hit 161.8%. You can just close out your trade, or hit 127.2%. You can close out your trade just in case price reflects back down, just like in this scenario right here. Okay, let us move on. Expansions. I'll show one more example by expansions so you guys can see. So if you notice that if I draw a line down, so I'm drawing from the top to the bottom right here, because price went up and retraced back up before heading down. So if you actually noticed, price tapped very, very nicely in the 50% Fibonacci line. 50% right here, tapped right in very, very nicely, reflected back down. Where did it go to? It went towards the negative 27.2% area. So we have negative 27.2 and negative 61.8%. So this could be your potential take profit target if you are looking for short. So let's say you shorted around here, stop loss above, can aim for negative 27.2%. So notice the moment price taps into that area, it reflects off, bounces back up. So always you can actually use 27.2%, negative 27.2%, and negative 61.8% as your take profit target. So you are just kind of forecasting where price might possibly head towards. Okay. Next, let's take a look at this slide. What do we have next? So how to use the projection tool. Just now I showed you guys already. I mean, haven't showed you guys, my bad. This projection. Okay. How will a projection work? So we are only going to be focusing on the 61.8%, 78.6% projection. So just a tip on it. So on the MT4, the Fibonacci projection tool is the Fibonacci expansion. And on the trading view, it is the Fibonacci extension tool. So ultimately, unlike the other three methods we have gone through in our previous webinars, this method requires 3 points: the starting, the middle, and the ending points. So we use namely the 61.8%, 78.6%, and 100% feed projections for this. You want to make sure you look out for flash zigzag shapes in this case. So notice it's like the Harry Potter, the zigzag right there. Harry Potter zigzag. Okay, my bad. Let me clear it out. Might have messed up this slide. Harry Potter zigzag pattern. Let's look at a couple examples of this. So looking right here, you notice that from the starting point, the top, draw towards the bottom and to the end. You notice that the projection lines showed the 100% and then price went back down. Tapped into the 100% projection line before it rejected towards the upside. So let us just take a look at some examples on trading view. Okay, Fibonacci projection, where is it located? It's located right here. So 1, 2, 3. On the top left hand of my trading view chart, you guys take a closer look. If you are on the phone, please scrutinize your eyes. Take a good look. So it's called the trend-based fib extension. My mouse cursor is over it right now. So you can click on it. Trend-based fib projection. Let me find one nice example. So probably same thing like from here. You can draw it from the starting point to the middle point to the end point. So draw it out. You notice price taps into the 78.6% area and the 61.8% area. But in this specific scenario, once price tap into the 78.6% area, it actually bounced towards the upside. And ultimately, price also continued moving down towards the 100% Fibonacci projection line. I find more examples for you guys to use. Okay, find another one. Okay, so like this, in this, okay, maybe this is, because this is likely a news event, so it's not the best example. Okay, let me find one. Okay, maybe here, this is quite a nice one. So notice there's a starting point, an end point, and a retracement point. So let's say you already started a short here. You started a short somewhere here, you wanted your stop loss over here, but you do not know where to take profit. How can you use this Fibonacci projection line? So draw from the starting point, from the top to the middle, and then to the end point. You can ideally aim towards the 78.6% or even the 100% retracement level. So looking at this area, the trade would likely hit a 1 to 2.82 risk to reward ratio before it actually did a minor bounce towards the upside. So let us find another setup. We'll find an inverse setup. Inverse, what do I mean by inverse? It's like a reverse Nike tick. So looking right here, we will be going towards the starting point, towards the middle point, and towards the end point. So we can draw from the bottom to the middle towards the end. So notice that once price went up, tapped into the 100% fib level, it actually rejected back down immediately. So you can actually use the 100% Fibonacci projection line as your take profit target. Just close it out there if you want to play it safe. You know, you are not risking it. You're not risking that price can continue moving bullish, because price first rejected back down and then continued to move back up. What if price just continued moving bearish? It would likely hit your stop loss. Let me find another inverse projection line. Okay. Let me find it. Still looking for it. Okay, I should find somewhere in the areas where there are long positions that are taken. Okay, so likely this is a good setup. So you are drawing from the bottom towards the middle towards the end points. So we're drawing from the bottom. The starting point, I mean, wait, this is the wrong tool, sorry. So we click on it from the starting point to the middle point and towards the end points. What do we notice? Price taps into from bottom to top, and then it frolicked around before it tapped into the 100% Fibonacci projection area. That should be your final take profit target before price started to frolic around and rejected back down. So you can use this as your take profit target, the 100% Fibonacci line. I'll do a few more examples, maybe 2 more examples, so you guys can understand what I'm actually talking about more in depth. So looking right here, another one. From the starting to the middle to the end point. So draw from the bottom to the top and to the bottom. So you notice that price tap into the 100% fib level as usual before it started to reject and then ultimately push towards the downside. So yeah, any questions so far, feel free to let me know. So any questions, just let me know. We have about 20 minutes left. Ask me any questions. Please do not wait until the end of the webinar before you ask more questions. Okay. Next, let me find a good one, another setup. All this is when we know the move of the market. Definitely, if you have a bullish bias, let me find something like this. So let's say you have a bearish bias. You are thinking you want to short. There's some kind of sell that you are looking at. You're trying to sell towards the downside. Something like that in such a situation. So we have a trend line, some kind of moving average that is telling you that price is moving down. So with a bullish market structure, you can actually draw. With a bearish market structure, my bad. So you can draw it from the top to the middle to the end point. So somewhere when the retracement goes back up, you're looking for some kind of structural break. So let's say you decided to short somewhere down here, stop loss above, you do not know where to take profit. You can use the Fibonacci projection from the top to the middle to the end point. So notice that you can actually use the 100% Fibonacci line as your final take profit target. Okay, what time frame can you use the fib? You can use it on any time frame, even on the 1 minute time frame, 5 minute time frame, or even the 30-second time frame. So yeah, any time frame works, but definitely, of course, if you are using 15 minutes, it works even stronger. So it's even stronger on the M15 chart. Okay, let me take a look. Let's say if you draw the fib from the top to the middle to the end, bearish bias. So drawing a fib, top, middle, end. So notice that price actually tapped into the 78.6 level instead of the 100%, just because you are on the larger time frame. So as the larger the time frame you go, 15 minutes, 30 minutes, 1 hour, all this starts to be more sensitive. Even this 61.8, 78.6 starts to be more and more sensitive as you go higher and higher up the time frame. So price went back down, retrace, tapped into it before it bounced right up. Find one more projection because it's a very, very new tool. Not many people are using it. In fact, 99% of people that I've met and talked to, they do not use Fibonacci projection. So it's something very, very new. It's a new tool. So let's say right here in this specific market scenario, it's a very, very obvious bullish market. So we have 1 tap, 2 taps, 3 taps, 4 taps, and 5 taps, and 6 taps. So this is a very, very confirmation that this is a strong trend line. Price is in a very, very obvious bullish market. 15 minutes chart. So next you can draw from the starting point to the middle point towards the end point. So you can draw the Fibonacci projection line from the starting point to the middle point. Is my bad, wrong tool. Starting point towards the middle point towards the end point. So notice that price came very, very closely within the 78.6% Fibonacci area before it rejected strongly back down. So price actually came pretty close towards the 100% Fibonacci level, but it did not actually tap into that. So just do take note, the higher time frame you go into, the Fibonacci projection lines start to get more and more sensitive. So if you are on the 1 minute, definitely I would try to aim for the 100% Fibonacci projection line as my potential take profit target. So looking right here also, drawing from the top to the bottom and to the end. So starting points, middle points towards the end points. You notice that price actually tapped nicely within the 78.6% level, and then reflected back up. So let's see the current price, the market price. We can likely forecast where price might head to. Okay, I don't think there's any setups yet, so maybe I move on to 1 minute. Likely we can see something. So maybe just because price moved from the top to the middle to the end points, we want to see whether price has reached its final, so-called final destination. So price has already tapped into the 100% Fibonacci projection line. So it's right now it's in a consolidation. Final target has been hit. So Vinicius, Sylvia asked, so to put on a fib, we need to use all the candle and not only the most significant part. Yes, you are aiming for the most significant part. If you look at 1 hour, another example on the 1 hour time frame. Let me find a good example. So we have a significant swing high right there and a significant swing low. So when a big drop like this happens, we always expect some sort of retracement towards the upside. So when price has reached its retracement, you can start to draw your Fibonacci projection area. So drawing from your top to the middle and towards the end. So draw it out, top, middle, and the end. So notice that price went up very, very nicely, retraced back up before it went towards the 78.6% projection line. That's correct. Do not just use the body. You always must use the wick. Okay, always use the wick and not the body. Okay. Any more questions? Jude, Aguabo, Kat, Kasmi, Samuel, Julian, Vinicius, Sylvia, Wisdom, Ikyangwa. Any more questions? Let me know. I'll try my best to answer you to the best of my abilities. Okay. So let us move back towards the PowerPoint slide. Okay, so please screenshot this down before we continue. Back, I had some technical issues with the mic. Okay, just now I already showed you guys the inverse Fibonacci projection. Okay, next, I already showed you guys how it bounces off, starting to the middle to the ending. Price hit the 78.6% projection before it bounced right back up. Okay, noted by this slide. Okay, Jude Aguabo, do they have this tool on Smart Money, on Smart Trader? I don't think I've heard about Smart Trader. Let me take a look. What's Smart Trader? Okay, I don't think I've used it before. You can actually try to search it up. So I'm only use TradingView and MetaTrader for my trades. So the 100% Fibonacci line is one of the most powerful Fibonacci extensions area. So notice when price taps into that area, it rejects off almost immediately. Okay, please screenshot this down before I continue. Yeah, that's actually a very, very good question. I've really never heard about the software called Smart Trader before. Maybe I might look up on it after this webinar. So yeah, as I mentioned earlier on, if you want to contact me outside of this webinar, you want to ask me any questions outside of this webinar, feel free to visit my Linktree. So my LinkedIn, my Instagram is all there. Please feel free to follow me. Okay, next. Invalid Fibonacci retracement. So when does a fib retracement become invalid? Okay, while I'm explaining, please screenshot this down. So one of the most common scenarios of this is when price makes a lower low. So assuming you are drawing a Fibonacci retracement from the top to the bottom, like in the picture, if there are bars on the right that break your ending point, let me find it right here, breaks your ending point, you cannot use these points as your retracement. So price has broken the 0% level and has made a lower low. Always remember to pick the lowest point with nothing on the right of the ending point. So you should be drawing from the starting point towards the ending point right here, because this was the lower low. Always okay. Combining Fib retracements. So right now we want to add confluence to our trades. So the trick is to find multiple Fibonacci retracement levels lining up together, so you can increase the probability of a bunch of Fibonacci retracement levels working versus a single Fibonacci retracement level. So that is the definition of Fibonacci confluence. So you notice just by using the normal Fibonacci extension line, 161.8% Fibonacci extension, together with the negative 27.2% Fibonacci expansion, together with the 78.6% Fibonacci projection line, all in one nice little area. And then price bounce off that Fibonacci confluence area towards the upside. That is what we call a Nike tick. So that is one of the best trading strategies out there at the moment. So okay, Vinicius Silvia asks, when using retracements, to what percentage should we look? So generally, let me type out in the chat, because I'm sure I'm talking a bit too fast. So we generally use 127.2%, 161.8%, negative 27.2%, and negative 61.8%. This is for Fibonacci line. So for Fibonacci projection, it should be 78.6%. Okay, wait, give me a moment. 61.8%, 78.6%, and the 100%. That's for Fibonacci projection. Okay, so yeah, just copy the text that I've just sent, and then you can actually customize it on your trading view. Okay, next. Just now I already showed you guys this, just a larger picture. So 3 different Fib levels there, negative 27%, 161.8%, 78.6% projection, and price bounce off very, very nicely. Okay, next. Fibonacci extension. So in this example, we have two Fib methods. We have an inverted Nike tick. So from the top to the bottom and to the middle. So you can see it's a very, very obvious Nike tick. Okay. So with price reacting off the 127.2% and the right here, I'm circling it multiple times, 127.2% Fibonacci extension line and the 61.8% Fibonacci projection line. So you take note of the flash shape, then we can see price bouncing. Let me get it out. Bouncing right back up. So I'm just showing a few examples. So this is another example. So we have the 100% Fibonacci projection line together with the 127.2% Fibonacci extension. So this area coincides very, very nicely in this tiny, tight little box area. Price steps into that area and then it rejected strongly towards the downside. Why? Because it's a Fibonacci confluence. Please screenshot this down before we continue. So this is actually a very good example. Okay, next, let us continue. Combining Fibonacci methods for the fourth example. So in this example, the 61.8%, so it's not that clear. Take note of this yellow dotted line. So that's the 61.8% Fibonacci retracement that is in line with the 100% Fibonacci projection to give us a strong confluence area highlighted by the purple square. So that's where price has bounced off, tapped and bounced off. Okay, next, you notice that I'm looking at the negative 27.2% Fibonacci expansion line together with the 100% Fibonacci projection line and the 127.2% Fibonacci extension line. So we have a nice little box area right here. Price steps into that and it actually reversed towards the upside. So that's a very, very strong confluence area. So please screenshot this down before we continue. So for Fibonacci retracement line, we only be drawing from the top to the bottom. Okay. Please screenshot this down. Okay, let us continue. Okay, next. So in this example, we have a swing low support. Let me get this. So there's a swing low support right here denoted by the green line. So in one long-term 100% Fibonacci projection in line with another short-term 61.8% right here. 61.8% and 100%. So we have a nice little area right there. And then it actually made a strong confluence area. Price then tapped in and then bounced right off. So please practice your Fibonacci extension, Fibonacci expansions, and your Fibonacci projection areas so you can bring your trading to the next level. Okay, I think trade management, we'll leave that to another day. So that's another topic that we'll be going through in the near future. So any more questions, feel free to let me know before I end this webinar. So I'll give you guys another 30 seconds or so. So just to let you guys know, I'll be very, very cautious about trading today just because the FOMC member William, FOMC member Barr will be speaking later. So it's actually a very, very volatile news event that is happening in about 3 hours and 15 minutes time. So later on, in another roughly 8 hours, we also have the FOMC member Waller speaking. So expect, for me, it will be through the night. So I expect much volatility happening in the markets. So I'll be waiting until tomorrow morning, after the Asian session, and hopefully find a trade during the London session tomorrow. So for now, I'm staying clear of the market. So I'm actually risk off sentiments. Okay, so yeah, I would like to thank you guys for joining me today. Appreciate you guys for staying from the start to the end of the webinar together with Sarah. So thank you, Jude Aguabo. Thank you, Kat Kasmi. Thank you, Samuel Julian. Thank you, Vinicius Silva. Thank you, Wisdom Ik Yangwa. No problem, Vinicius Silva. No problem at all. No problem, Samuel Julian. Hope to see you guys soon again. Stay safe trading, especially tonight. No problem, Jude Aguabo. You said thanks a million for the sauce. No problem. I'll be glad to share my secret sauce with y'all. Okay, bye guys. Take care. I'll be leaving now.